As we all know, the Irish budget is coming very shortly, and instead of trying to predict what will happen, because as I've said before, I don't have a working crystal ball, I thought I'd share with you some of the great things that have happened in budgets historically, some of the bad things that have happened in budgets, and some problems that some of these good and bad things have caused. So looking back in history, let me give you my opinion as to the top 3 new rules and regulations that were brought in by historical budgets. Number 3. Minister Charlie McCreevy in 1997 has the foresight to reduce capital gains tax from the then 40% rate to a 20% rate. Now, the naysayers at the time would have told him that's going to lower your exchequer receipts, but it did exactly the opposite. Minister McCreevy reduced the tax rate by 50%, and the exchequer receipts jumped by 85% the following year, 1998. And I know this is counterintuitive, but that shows you what I talk about regularly, which is lower tax rates equals more exchequer receipts, not less. What was happening in 1997 is the extremely high capital gains tax rate, which, by the way, is we're getting close to now, at 33% today. But that was a barrier to activity. And this is the point to be made. High tax rates are a barrier to activity. Not only can I point at Minister McCreevy's foresight in reducing the capital gains tax rate, but the Irish Fiscal Council in recent times produced a report looking back at the history of income tax in Ireland and looked at the late 70s and early 80s, where income tax rates, believe it or not, were as high as 80% at the top level, and found that that meant lower exchequer receipts. If you overtax people, and what the Fiscal Council found was that promoted the black economy, that people would do things under the table to avoid such high rates of tax. It promoted a brain drain, that people with high incomes decided not to work here any longer. And it led to a lowering of exchequer receipts. This Fiscal Council report says definitively high income tax rates equals lower exchequer receipts. So number 3, Minister McCreevy's foresight. Number 2, let's talk about section 23. Other similar sections around that, but broadly section 23 was a tax incentive to build property in certain areas that were considered disadvantaged at the time. And basically what it said was that investors in properties in these designated areas could reclaim 100% or could claim 100% of allowable expenses against their taxation. So what did that mean? Allowable expenses were basically all costs of building and fitting out a property, barring the site price. But let's say you paid €100,000 in qualifying expenses to buy a house at that time. At today's tax rate, because we can only use today's tax rate to illustrate for you, that would have meant a €40,000 tax saving over up to a 10-year period if you were allowed to claim it. What did this lead to? It led to 30-odd thousand new homes being built. It led to huge amounts of jobs for carpenters and quantity surveyors and bricklayers and tilers, etc., etc., all of whom earned their money in the Irish economy and paid Irish taxation. So while there was a substantial cost to the state of this activity, the result was much more people in employment, much more exchequer receipts on income tax, and of course 30-odd thousand properties built in the areas that were deemed in need of extra property. Now, We already have a housing crisis, don't we, today? Imagine what that housing crisis might be if these 30,000 properties had never been built. Worse. So not only did those tax breaks benefit people who are making the investments from a tax perspective back then, but they continue to deliver benefits today. A lesser, albeit still a housing crisis, but a lesser one. And as most of the investment activity was based along the western seaboard, what came out of that was the wild Atlantic way, attracting millions of visitors to Ireland up to now, and to attract millions of visitors to Ireland in the future. The message is that tax breaks not only benefit the people who use them, but benefit society in general. Number 1, SSIAs, Special Savings Investment Accounts. Legislation passed in 2001 which incentivized people to save money. The economy was overheating, there was too much spending going on, there was too little saving going on, so the state brings out a 1-year program called SSIA. What did it offer? It offered you, for every €4 you invested up to a maximum limit, the state would add €1. So at 25% free money. What did it cost the Exchequer? €3 billion over the year 2001 to 2002 in total. What did it deliver to the Exchequer? Savings in excess of 15 billion spread across 1.2 million people. What did those people do with those savings? Spend them in the Irish economy. What does that mean? That while the cost may have been 3 billion, the return to the Exchequer was far greater than that. And that is the point I want to make, that tax breaks benefit all society. Sure, they benefit the people who use them directly, but they benefit you and I indirectly. They create employment. They create Exchequer receipts in other areas. So tax breaks are to be applauded, not vilified. And while I don't expect the next budget to introduce a huge number of tax breaks, I would encourage the Minister to consider doing so, as evidence time and time again through history shows that it increases Exchequer returns and therefore benefits society as a whole. So we've seen the good. Now let's look at my list of the 3 worst. Let me interrupt this podcast for a moment. Do you know how to create wealth? Do you know how to limit your taxation? Do you know how to protect that wealth when you do create it? Well, if the answer is no, our Masterclass is for you. Over 12 modules and 36 videos, I will personally teach you how to create wealth, how to minimize your taxations, how to protect that wealth when you create it. Check out the link below, and now back to the podcast. So coming in at number 3, the insurance levy. Let me give you a bit of history about this. This is a levy, by the way, that all of us pay on car insurance and house insurance and that type of insurance, which basically costs us 2% on top of the normal premium. It was brought in 1984, and basically it was brought in because at the time, a company called Insurance Corporation of Ireland was in danger of going bust. Who owned this company? Another company you've heard of, Allied Irish Banks. And instead of bailing out their own company, they gave it to the state. It was nationalised, and at that time cost the state 400 million. In today's numbers, that would be 600 million. And while the AIB gave some money towards this in terms of property and other transfers, the taxpayer, it was left with the bulk of the bill. That levy disappeared in 1992, only to come roaring back at us in 2012 when the Quinn debacle became evident and remains with us today. Temporary tax. which we're still paying. Now, I'm not saying for a second that the state shouldn't get involved. I'm not saying that they should allow people lose their jobs if it's possible to save them. I'm not saying they should allow insurances to lapse even though businesses need them to be operational. But what I am saying is that when the individual or entity that caused this cost to the taxpayer makes huge profits down the line, it should pay for it. That's not happening. So my problem with these levies, number one, they were temporary. Number two, they are bailing out very wealthy institutions that have easily the wherewithal to pay it back, but never seem to be asked to do so. Number two, indexation relief. Indexation relief was introduced around capital gains tax and a few other taxes back in the late 70s. And what it recognised was that when you sold an investment asset, that the value of that investment asset, that the full value you sold it for, did not equal the profit because time value of money had eroded value. Inflation erodes value. Now in 2003, Minister McCreevy withdrew indexation relief. And he did so for two reasons, main reasons. One is inflation had fallen considerably relative to where it had been in the late 70s. And two was that he had cut by 50% the capital gains tax rate. Now, since that, subsequent governments have increased the capital gains tax rate up to 33%, close to the 40% it was at when Minister McCreevy cut it in the first place. But they haven't reintroduced indexation relief. So, let me give you some numbers. If you made an investment in 2003 and you were selling it in 2005 and indexation relief was allowed, that property could have risen, or that asset could have risen by 3.78% a year, and you would have zero tax liability because 3.78% a year has been the inflation rate. Now, if you're under current rules, if you did make 3.78% a year, my point is you've made nothing. The buying power of this investment, of these assets, are exactly the same as they were in 2003, and yet you're being asked to pay 33% tax. The tax causes it to be a loss. Taxes aren't supposed to be levied on losses. They're supposed to be levied on gains. But the absence of indexation relief means that many of us, those with deposits, those with assets that have underperformed or performed at 3.78% a year for the last 13 years, you're paying tax on losses. And the final, number one thing, deemed disposal. Deemed disposal was introduced in 2001. And basically what it means is that if you make certain types of investment, predominantly pooled investment funds, that every 8 years you are deemed to have disposed of the asset and you're charged deemed disposal tax at 41%. What is my problem with this tax? Well, never mind the quantum of it, but think of it. If you guys listening to this are a 20% taxpayer, deemed disposal is double plus 1%, the tax rate you should actually be paying. The other problem I have is that it's levied on the 8th anniversary. So imagine you made an investment that had a 5% a year return for the first 8 years. And on the 8th anniversary, that 5% a year is taxed at 41%. But the following day, the investment falls by 20% in value, which is possible for some. If that tax had been levied the following day, it would be considerably less. Disposal tax should be paid on disposals, never on deemed disposal. And while we're told that this is being examined by the current government, I am not confident that it will be removed in this coming budget. even though people within the current government have recognised that it is a barrier to wealth creation in Ireland. So they're my good and bad. And I suppose, again, without having a crystal ball, I can't tell you what will be good or bad in the next budget. But before we touch on that, let me remind you that there are many excellent tax concessions available. Tax concessions like SURE, Startup Relief for Entrepreneurs, like KEEP, Key Employee Empowerment Programs, like APSS, Approved Profit Sharing Schemes, reliefs down the line, entrepreneurial relief, retirement relief. All of these are on the statute books today and usable depending on your circumstances. And as I say to most people on the consults I meet day by day, let me say to you, the route to tax minimisation is looking forward, saying what's likely to happen and what can I do today that will de-tax those events in the future. You can't save tax by looking backwards. It's impossible to change yesterday, but it is possible to change tomorrow. And with the help of a proper financial planner, taxes you deem as mandatory or inevitable can be eroded through proper planning. It only remains for me to thank you again for listening. Thank you for viewing. Thank you for subscribing if you've done so already. Thank you for subscribing in the future if you haven't done so yet. And please bear in mind the subscriptions allow us to produce this content. And next week we will be producing something on the budget virtually as it happens. What will it entail? How will it impact you? And what, if any, additional benefits might you be able to accrue through new legislation?